So,
Yes.
I'm preparing a revaluation account, but my answer is not the same as the one given. Here.
Okay, how much you got?
Here I got 26,000.
26,000. How?
Is the first we have to do buy building, which would be 10,000.
Okay.
The next buy stock, which would be 4,000.
Okay.
So then buy a workman compensation reserve 2,000.
Then it should be 16,000 as per this.
Yes, sir.
So how you got 26,000?
So I also added the cash.
Goodwill.
Yes, sir.
You know this, that goodwill is not written in revaluation, never.
So but it's brought in as cash. So I thought,
Jed brought in as his share of goodwill. So whenever a new partner is admitted, he will always bring his capital and goodwill. And that goodwill is distributed between partners as premium for goodwill. We have passed the journal entry, if you remember.
yes, sir.
What is the journal entry
Um,
for bringing capital and goodwill?
the cash account debit to capital account and premium to goodwill account.
So capital account and premium for goodwill on the credit side, yes.
Yes, sir.
And after that,
Uh, Premium for goodwill account debit to sacrificing partners account, capital account.
yes. So is there any revaluation account in these journal entry?
No, sir.
So we will not write the goodwill brought by new partner in revaluation. Goodwill is never written in revaluation account. You have to remember this.
Okay, sir.
Okay. The next thing is, I told you about workman compensation reserve also. That when workman compensation reserve is created in books, it is shown in our balance sheet and there is a claim against it. So if claim is more than the reserve amount, claim is more than the reserve amount, then we will write the difference in a revaluation account because it is a loss. Yes.
Yes, sir.
But if claim is less than the reserve amount, then the balance is profit for us. We will not write it in a revaluation account. We will transfer it to capital account, distribute it between partners, old partners.
Okay, sir.
Okay. So workman compensation reserve will not be written in a revaluation.
Okay, sir.
Done.
No, sir.
Okay, so up to which part you have completed?
Sir, I've done the revaluation account, partners capital account, and calculating the capital.
Okay. So what is your balance in capital?
So that's we can do that.
And you are doing adjustment of capital. Yes.
Yes, sir.
So for that, you need adjusted capital of X and Y. Have you calculated that?
So that's what I'm calculating.
Okay.
So
Yes.
the fourth adjustment they're given, Z was to bring in further cash as to make his capital equal to 20% of the combined capital of X and Y. What should we do there, sir?
Okay. Can you repeat your question?
So the fourth adjustment in the question.
Fourth adjustment. It is Jet was to bring in further cash as would make his capital equal to 20% of the combined capital of X and Y after above revaluation and adjustment are carried out. So in previous question, in question number 80, what we have done to calculate the new partner's capital?
So we found the adjusted capital of the existing partner, and then uh, we multiplied it with the reciprocal of the combined share of the existing partners.
We need adjusted capital, yes?
Yes, sir.
Okay, so that is what it is written. 20% of the combined capital of X and Y after ever revaluation and adjustments are carried out. Means after all the adjustment, we have to calculate the capital of X and Y, and then on the basis of their capital, we have to decide Z capital, and he will bring cash for capital, which is normal. If it is not written in the question, if it simply say that we have to calculate Z capital, then the treatment is also same.
Okay, sir.
So you have to adjust the capital of X and Y. Then on the basis of their capital, you have to calculate the capital of Z, and Z will bring cash for that capital.
Okay, sir.
Okay.
some like partners' capital balances are not adding up correctly.
Okay. So how much you got?
So for X, I got 29,600.
29,000.
Yes, sir.
You leave the goodwill, I think.
No, sir, I included it.
Okay. So
Sir, I wrote balance brought down 10,000. Premium for
10
goodwill 10,000. By reserve 1,200
by reserve
and 1,200.
1,200. It will be 12,000.
Maybe
Sorry.
calculations.
Wait. No. It will be 9,600. General reserve.
Oh,
You have written general reserve.
sir, I put the workman compensation reserve, the balance which is distributed to the partners.
Okay. Yes, that will be 1,200 and 800. Okay. But what about general reserve?
So that time is out.
Okay. And you have written goodwill. And what about revaluation profit?
So that I wrote.
Okay. Okay. Please calculate again. Done?
Yes, sir.
Okay. So you got the capital balance of X and Y
Yes, sir.
and also Z.
Yes, sir.
Okay. So how much you got?
So for capital of Z, I got 15,000,
Okay.
and the adjusted capital of X is 39,200, and for Y it is 20,800.
Okay. So for Z, you got 15,000.
Yes, sir.
Okay. Good. So that is our solution. Now, so we have completed our adjustment of capital in this chapter. Now you have to solve as many questions for this topic. Okay. Now we have to discuss about next topic, that is retirement of partner. But let's quick revise our concept of this chapter first. First of all, why admission of partner is required.
So to bring in additional capital or extra knowledge or skill persons.
Or extra hand.
Yes, sir.
Okay, so these are the reasons. Okay, good. Now, let's say if there is old ratio and new ratio, old ratio of existing partner and a new ratio of all the partners are given in the quotient, then what we have to do for ratio?
So when old ratio of existing partners and new ratio of all partners are given,
Yes.
so we have to find the gain or sacrifice.
Okay. And what is the difference between from his share and of his share?
So from his share means we have to deduct it from the partner's share, existing partner share, and of his share means we have to multiply the new partner's share with the existing partner's share.
Of his share means we have to multiply the given fraction with the existing partner share, and then the result will be deducted from existing partner share.
Oh, yes, sir.
Okay. So this is for ratio. The third is goodwill. Now, how many types of goodwill can be given in quotient?
So the normal goodwill and the hidden goodwill.
Yes.
So the normal goodwill and the hidden goodwill.
No, it is existing goodwill and valued goodwill.
Oh, yes, sir.
Hidden goodwill is, you can say it is hidden. It is not part of goodwill.
Okay, sir.
It is like a situation in quotient. Okay. So if you told me about hidden goodwill, can you tell me the process to calculate hidden goodwill?
Um,
Don't remember?
Not exactly, sir.
Okay, no problem. Okay, actually, first of all, we calculate the adjusted capital of partners like uh, we have calculated here, and we take the capital of new partner that he is bringing, because there is no information about goodwill, and it is said in the quotient that we have to calculate. There is no information, but we have to calculate it as per the quotient. So in that case, hidden goodwill exists. Now, if hidden goodwill exists, then we will take capital of new partner and multiply it with reciprocal of his share. Okay. So let's say the new partner's capital is 2 lakh and he is getting 1/4 share. So we will multiply 2 lakh into 4. It will be 8 lakh. Okay, 8 lakh should be total capital of firm. Now we will take adjusted capital of existing partner. Okay, and then we will add the new partner's capital also. Let's say we get total by adding all these items, all these capital, we get 6,50,000. So it means there is 1,50,000 worth goodwill.
Okay, sir.
So first of all, we will calculate the total capital of firm. We will calculate adjusted capital of existing partner. Then we will calculate actual capital of firm after including the new partner's capital also. Okay, and then we will calculate the difference. It is hidden goodwill of firm. Okay, what is treatment of? Actually, it is already discussed here. You told me about this. Okay, in which ratio we distribute valued goodwill?
So the gain or sacrifice ratio.
Gain or sacrifice? Yes, it is gain or sacrifice. And in which ratio we adjust our existing goodwill?
Sir, in the old ratio.
In the old ratio, very good. What about revaluation account? Can you tell me 2 or 3 entries for revaluation? 2 or 3 journal entries.
Journal entries. So asset account debit to revaluation account is when assets increase. Revaluation account to asset account when assets decrease.
Okay.
Liability, and then revaluation account to liability account when liability increases. Liability account to revaluation account when liability decreases. Unrecorded asset. Yes, sir.
That's it. For distribution of revaluation profit or loss.
So the journal entry.
Yes.
So revaluation account profit to no. There's a profit on revaluation account to revaluation partners capital. Then I'm not sure.
Okay. For profit on revaluation, it is a revaluation account debit to partners capital, and for loss on revaluation, it is partners capital account debit to revaluation.
Okay, sir.
Okay. Which amount is written in revaluation account? The old value of assets or liabilities, or the new value of assets?
So the difference between the old value and the new value.
Very good. Difference between these. Now, the general reserve accumulated profit or loss treatment.
Yes, sir.
Tell me.
So they will all be distributed between the partners in the old ratio.
Okay.
So only journal entries.
Yes.
So there are 2 cases when the account is to be closed and when it is not to be closed.
Yes, that's what I'm talking about.
And
Okay.
when the account is closed, the entry is the journal reserve, profit and loss, and all the accounts debit to partners capital account, and
Okay.
partners capital account to yes. So that's for the profit, and for loss, it is partners capital account debit to profit and loss account or yes, sir.
Okay. So it is actually in second case, it is sacrificing, gaining partner's capital account debit to sacrificing partner's capital. Yes. This is for second case.
Okay, sir.
And for first case, there is two separate entries, one for profit distribution, one for loss distribution.
Yes, sir.
So for distribution of profit, it will be general reserve account debit, profit and loss account debit to partner's capital. And if there is loss, then partner's capital account debit to profit and loss, to advertisement suspense or to miscellaneous expenditure that is written on the asset side of balance sheet.
Okay, sir.
Okay. And after these, there is last concept of adjustment of capital that is we have discussed already. So I will not ask question from adjustment of capital. There is two cases for adjustment. One is when old partner's capital is adjusted as per the new partner's capital and his profit share. And the second case is when new partner's capital is determined on the basis of old partner's capital and their profit share.
Yes, sir.
So this is our admission of a new partner chapter. Now we will talk a little bit about retirement. Okay, what do you understand by retirement word? Not retirement of a partner. I'm just asking for retirement word.
So before that, for our term exams, which is coming up, we have another chapter, which is the company accounts.
Tell me the chapter's name.
Company accounts, accounting for share capital.
Accounting for share capital. Only share capital, not debentures?
No, sir, only share capital.
Okay. And
Sir, and the partnership fundamentals, goodwill, change in profit sharing ratio.
these are already completed. Yes.
Yes, sir. Only this chapter is not completed. Others already complete.
Okay. Okay. And date of your accounting examination?
Sir, it's on 24th of this month.
20. Okay. So we will start accounting for share capital. Okay. So first of all, for starting accounting for share capital, we have to quickly revise our company chapter or little bit information in that chapter. Do you remember any of the topic in that chapter?
Sir, was it the first chapter?
First chapter is financial statement.
Oh, yes, sir.
Do you remember?
Sir, it was the one with the balance sheet and the heads of accounts and all the items under
Yes.
it.
Yes. And there were some definition part also, like definition of company, share, like these.
Yes, sir.
Don't remember?
The theory part.
Okay, no problem. Please revise that before our next class. We'll discuss
Okay,
that.
sir.
Okay, the thing is, actually, before starting this, can you tell me that when someone asks you question, like I have asked right now, what you feel? You fear these kind of situation, or you afraid, or you enjoy answering the question?
So sometimes I feel because I don't know how some things, but
Okay,
other
so
things,
if you don't know the answer, then you're afraid of these kind of situation. Yes,
yes, sir.
otherwise it's good.
Otherwise, it's fine, sir.
Okay, so what about this chapter questions I have asked, right?
Right.
Little
Same
bit
thing for
clear.
yes, sir.
Okay,
But this recap of the chapter was fine. But while taking the lesson, some places I didn't know, sir.
okay, okay. Actually, I'm preparing you for any kind of situation. Sometimes it is not possible that you remember everything in your examination. Okay, so if you handle this kind of situation that you don't know the answer, but you have to write it because you cannot leave the paper blank. Yes,
Yes, sir.
you have to answer all the question. Please, if you don't try, then in future, please try to solve all the question, like 100 marks question. Don't leave any question.
Okay, sir.
Okay. So the next thing is accounting for share capital that we have to discuss. Now, share capital. Before understanding share capital, we need to understand what is a company. Okay. There is three forms. Actually, there are many forms, but there are three main forms of any business in which company is uh, the most important nowadays. Okay. The first one was proprietorship, the second is partnership, and the third is company. We have already discussed the proprietorship part and partnership part also, some of the partnership part. And now we are going to discuss the company. So what is a company? In simple words, if we talk about a company, company means uh, an organization which is created by law, okay, or by process of law. Okay, so it is created by some person uh, through the process of law to earn profit, okay, for its shareholders. Now, what is shareholders? So shareholders means actually capital of company, capital of company is not like you invest a lump sum amount in the business and it becomes capital. Generally, it becomes capital in proprietorship and partnership, but it is not same in company. Okay, you don't go like let's put 5 lakh into the company and start a business and it is capital of company. No, you have to go to government with your all the documents and specified capital, director's name, and rights, duties of company and their directors. You have to write all these things like rules, regulations that you have to follow. So these kind of things, you have to give these information to the government. And if government is satisfied, like here, the government representative is Ministry of Corporate Affairs. Okay, MCA it is called. So we go to the registrar and we deposit all the documents of the company. And then if registrar is satisfied that our company is real and it is not created for fraudulent purpose, then he will sanction, he will give permission to start our company. Okay, and on the date of its permission, it is called date of incorporation, means date of birth, you can say, for a company. Okay.
Yes, sir.
Okay. Now, when we start our company, it is a date of incorporation, a certificate of incorporation we receive from registrar. Now, after starting a company, so after starting a company, I told you that we have to give information of our capital to registrar, or you can say government. Okay. Now, these capital is not lump sum. it is divided into small parts.